Hello, this is John Piper with the weekend video clip, and it's Saturday the 1st of November. Looking here at a chart of the Nikkei Dow. Thought we'd start with the Nikkei as soon as the US announced the end of QE. Japan announced the beginning of an added QE for their own structure. We went long of Japan back in 2013, around the 10,000 level. The particular investment has actually slightly outperformed the Nikkei. The wave pattern here is, we got a 1, triangular 2, and it was a break out the triangle that triggered the trade. I do have written a book called Trading Triangles and this kind of thing, which I think is now about £1 as an e-book, so if you want to get hold of that, it's on Amazon. That would be a 2. We then got a 3, then a 4, and then a 5. That's my preferred count. We took half profit above 16,000. We then held the other half through this little decline, and now we've made new highs, blip back, and of course now shooting up again. So on Japan, which is a very different situation to Western markets, the peak was around 39,000 in December 1989. So that's now 25 years around. Long-term bear markets, the sort of rule of thumb is that they often recover the lost ground within 25 years. Well, the Nikkei has yet to recover even half the lost ground, but it is making some progress at the moment, and obviously has doubled from here, which is good. Where to next? Difficult to say, but right now we're staying long of Japan on that position. Let's have a look at the US market. Right, well, as far as the Dow is concerned, it's now made a new all-time high, so this negates the previous move seeing to an ABC, which is something I've been saying for a while now. Wave counts, no obvious count right now, but we are certainly due a more substantial pullback. We've had a couple of, one early on, another one there, another one there, another one there. Had to see whether, I would again say we'd do something, especially now that we're into new high territory. See whether that's sustainable. So the DAX though first, it has a very different picture on the DAX. Okay, the secondary peak came in there. This looks like a clear 5 waves down, but of course it could be counted as an ABC. I'll talk about that in a minute. We've had various possible ABCs again, more substantial pullbacks, and all we've achieved in Friday was a move slightly above the 61.8% level. So again, needs to see how that pans out to come. Next week's going to be pretty critical, obviously. Now the new month, we tend to get solid buying on the first day of the first trading session of the new month, although it may possibly have come in a day earlier in view of what's happened. But right now, because we haven't actually gone beyond the Fibonacci level, it's possible this is still corrective on the DAX. So let's expand this target slightly. So on the daily chart, we can see that we can actually count just a clear A, B, C, with solid spikes on both. And this rally, which has looked corrective so far, but yesterday was a first indication it could be something other than a correction. And again, need to wait and see how that develops. Once the market gets to a solid resistance, obviously the all-time high on the Dow is solid resistance. It can easily fall back as well as go forwards. But again, the first trading session of the month is obviously a key. It's often a key one. So we'll have to see how that develops. Look at FTSE. This is the hourly chart of FTSE. So again, we've got the decline, less obviously corrective than the Dow, but possibly corrective because the initial move we discussed. You can't see it on this chart. Again, the rally looked corrective. Only just got up to the 38.2% level. 50% is here. 61.8% is up here, I believe. So it still looks pretty corrective, but of course that could change come next week. It's certainly looking a lot less corrective than it was previously. So same picture here really. Gold. I already discussed gold in the previous clip, but just to cover the ground again. Basically we've now seen the break down below here, which I've been talking about as one possibility. We've got the first leg down here, and that looks like an ABC, but it also formed a triangle. We then broke up to see a 2-wave possibly, then a 3rd wave decline, now another triangle which saw 1, 2, 3, 4 and 5. We then saw this decline come in, and so far we've got a 1, 2, 3, 4 and a 5 in fact. It's also not dissimilar to the move we've seen here. That move was a bit bigger, but in terms of percentage wise it's probably not hugely different, because obviously we started around 2000 here, whereas we're actually almost quite considerably less than that. So in percentage terms, I think the two moves are probably quite similar. We've already got 5 waves. We haven't seen a low though yet. There's no clear sign of a low. But that could now be pretty close. So gold could be about to resume its uptrend. It's just a question of how much further it goes down. I mean, obviously you never know with markets. It could go down to 1,000. You just have to decide for yourself what you want to do. But right now, the wave pattern. Let me just clear this a little bit. Right, this is the daily chart. So we've gone down the leg. The wave pattern for here: 1, 2, 3, 4, and then this 5th wave coming in is fairly clear. What will be perhaps worrying is to see a low, see a sort of maybe a low down here, see a rally, but maybe failing at the fourth wave level, around 1250, and then heading down again quite fast. And clearly a break. If we then saw a break of the low, okay, we're looking a few weeks ahead here. But if we saw a low, gold bounced back above 1180, and then that low got taken out, then it could be a 3rd wave. We could be seeing an extended 5th wave decline. At that point, we could see quite a lot of serious damage to gold. Although there is some panic already, I think so. It may well be that this shakeout could be the last one. As I say, you're never quite sure what markets might do. So right now, the pattern is developing as I said it might, but where it might go is still uncertain, as is always the case. And similarly with the Dow, I mean, as I say, we're at that resistance level. Well, how much further it goes above there is questionable. I mean, the Japanese QE may be a very good thing for the world. It depends how you look at it, really. I mean, if you look at the original QE experience in the US, they got in first, worked well, but Europe is still languishing. There's no global recovery at this point. The Japanese initiative might work well for them, but what it does for the rest of the world, and of course we are in a global economy, so it's not all simple at the moment. But we will see what markets do. Finally, pound dollar, interesting chart here. We've discussed 2 different counts. The more critical count is if that is a 1 and that's a 2. Then we've got 1, 2, 3, 4, 5. So clearly that loads of importance. Now since then we've just seen an A, B, C, suggesting this count is correct, that we're just seeing a correction now of these 5 waves here. If so, we could now see another move down, and the key would be a break below there. Similar to here, this was a solid 10 cents down, so another solid 10 cents down at a third of a third, which could of course be faster, could be quite disruptive. Such a move could set the scene for Iranian gold, perhaps. It could set the scene for a high in the Dow, perhaps. So it would be could be a major turning point for markets, and this remains to be seen. So the key thing here is, I mean, I'm already holding some small position pound dollar short. I of course mentioned back a few weeks ago I bought dollars, as I said, and some euros. Euros wasn't a great buy just yet, but of course as I live in Spain, it's quite handy to have a few euros around, and the exchange rate was attractive. But I think the dollar is going to get a lot stronger. I think the pound's going to get weaker, and the chart shows that. So I plan to have an extreme stop in place below here to catch a move that could be dramatic. The alternative here, just to give you an alternative count, is that what we're seeing here is a 1, 2, 3, 4, 5, and then what we're seeing here is just the beginning of a bigger correction. A, B, C, B, C. If that happens, then we shouldn't really see a break below there. It's not a solid rule. There are no solid rules in markets, but it will be a false break. So it's important for us to watch what happens on the extreme stop, if that's the way you want to play this. Right, that's all for now. I found it interesting and useful. Looking forward to seeing some of you on the seminar on Monday. I'll be doing a report on Tuesday morning as usual. Have a great weekend. It's nice and sunny over here. Quite oddly, when I left Malaga yesterday, the pilot said it's unusual in November, so October of course then, to say that the temperature and the weather conditions in Malaga are almost exactly the same as in Gatwick. So, which must be one of the first times ever, I think, really. But in fact, as it happens, in Spain, it's probably slightly hotter and slightly sunnier, but not much actually, and it's really very pleasant over here as well. Anyway, enough of that. I'll be seeing some of you on Monday. I'll be talking to, or advising some of you next week. Have a great weekend. Bye for now.